Last 2.5 years is probably the toughest market for existing homeowners and waiting home buyers. If you're a homeowner owning a variable rate or renewing in the last 2.5 years, you will probably be in a massive shock on how much more expensive your mortgage payment has gotten. On the other hand, new buyers are not having it any better as well. Because of extremely high mortgage rate, their qualifying mortgage amount has been shrunk substantially. On one end, you have a lot of homeowners or investors trying to get out because of such a high interest rate. On the other hand, you don't have a lot of buyers being able to purchase their home. So for 2024, rightfully so, home sales have been flat all year and the average price has fallen as well. But as we're entering a rate cut cycle for Canada and US about to have the first rate cut today, many are wondering for 2025, what is the Canadian housing market going to be like? Now, since housing market is very different in different communities, for this video, I want to use Greater Vancouver as an example and then look at historically, every time we've gone through a rate hike and rate cut cycle, what has happened to the Vancouver housing market, and then revisit the current situation to see if it's any different or it's actually very similar. And even though you will say the market then will be very different from the Vancouver market now, which I completely agree. However, I still think there is some value to visiting the behavior of buyers and sellers during those times and see if we can extract any information from it. Now, for the last 25 years, we've actually gone through three such cycles: the 2000s, 08, and the 2019 COVID. For this, I'm going to omit 2019 and not look at what happened during those times because of a thing where everybody was locked inside their house for a year. They couldn't go out. It artificially created such a huge pent-up demand that have skewed the graph so much that I'm not going to be looking too much into it. Now, starting with 1997, we're seeing a gradual rate hike all the way up to 2000, where then we entered a dot-com bubble and everyone crashed basically, and then we had a rate cut from 2000 and 2001. All right, first let's look at unemployment rate during those times, because I also want to see if unemployment rate standalone has a big effect on the housing market versus just interest rate itself. So for 1997 to 2003, we can see that unemployment rate is actually elevated within Vancouver. All right, so keep that in mind as we look at sales, activities, and prices. Next thing I also wanted to know is what is the population growth at that time of Vancouver, because again, this can mean more demand coming in. At that time, we are seeing a very steady, almost 2% growth per year during those years. Next, let's look at the sales number. By the way, all these sales numbers and benchmark prices are from the Greater Vancouver Real Estate Board. So we can see that from year 2000, as we go through the dot-com crash, it has actually substantial effect on the housing market. Sales activities were down across the board in Vancouver. Now, however, what we can see is as the government begins to cut rate, immediately year 2001, we'll see a huge bounce back. Now, unfortunately, I couldn't get the data from the annual because for some reason the December one was missing. So the closest I could get was what was happening in November year over year. On average, we see more than 50% increase in sales activities across the board once interest rate starts to cut. And then for the next 2 years, we actually saw sales activities remain at an elevated level compared to 2000 and 1999. Now, on the other hand, looking at the prices, we can see that for year 2000, even though activities were lower, prices actually didn't drop too much. It only dropped maybe 1 or 2%. It was largely stagnant. However, after that, as rate begins to cut, for the next 3 years, we actually saw a pretty substantial increase in benchmark price across the board. Now, of course, one of the reasons is because immigration has started to get pretty heavy at that time, where there's a lot of cash-heavy investors or people immigrating over, and they weren't really affected by higher unemployment rate. So they would be able to bid high and buy more and more expensive homes anyway, and that's why we saw bigger sales and more prices. So we'll keep that in mind as we visit 2024 situation. All right, moving on, let's look at 2008. Now, during this time, the interest rate was gradually increasing from 2004 all the way at the peak at the end of 2007. Now, during this time, unemployment rate is also at a 4.5 to 5.5% before the great financial crisis. And then once we hit 08, for the next 3 years, we're at actually above 7% and sometimes even pushing almost at 8%. And then afterwards, 2012 and on, unemployment rate has gradually improved, but was still somewhat elevated until it was 2015. On the other hand, population growth has stayed steady, increasing at around 1.4% per year. Now, looking at sales activity, we can see as 05, we are seeing a substantial increase that year, followed by a drop next year. likely this is people rushing in to buy before the interest rate starts increasing. And then 06, as we see rate increase, sales have receded. Now, once 08 hit, similar to the dot-com bubble, whenever there's a global financial crisis, sales activity actually do get impacted quite a bit. Now, this time it actually got hit quite heavily. It's around 30 to 40% drop compared to last year across the board. And even if we were to pin that number across the average of the last 5 years-ish, it's substantially lower. Now, however, once the rate starts cutting in 08, and we remember the rate cut was super aggressive, Bank of Canada almost had a 0% interest rate, we saw a very, very big rebound next year in sales activities. And the year after 2010, we saw a dip in sales activities again. Now, this could be explained because everyone that could have bought at 09 went into the market and bought already. So there weren't as many buyers available anymore. So that's why we saw a natural dip in sales. Now for 2012, I wasn't able to get the individual data because the board didn't have them. However, I was able to get the annual sales number was substantially lower than the year before. This was very interesting because I didn't recall any, global financial issue happening at that time. So I actually went back and checked what happened. Well, turns out what happened that year was a new mortgage underwriting rule were being implemented. That was a time where any CMHC insured mortgage had a cap of 1 mil house prices, and amortization changed from 30 years to 25 years. Also, they changed the minimal deposit from 15% down to 20%. And also, they tightened the debt service underwriting to 39% for GDSR and 44% for TDSR. This, in combination, have restricted buyers to borrow a much bigger mortgage versus before, and that's why sales activities has dropped significantly. Now, this is actually quite interesting because we can see when you change the mortgage borrowing rule, when you restrict people to borrow more money, it will naturally impact the housing market activity in Vancouver quite a bit. Now, we have to keep this in mind because the new mortgage borrowing rule that just came out last week actually has an opposite direction for what we're seeing in 2012. So looking at the prices, so we're seeing actually a very aggressive increase in price all the way until the great financial crisis. Once that hit, because sales activities were down so much, we've seen about a 10% drop across the board when it comes to benchmark prices. However, similar to the last example, as we see rate cut happens, we see an immediate increase in house prices the next year. Of course, because due to a hot market. And then after that, the housing market continued to have a strong growth in prices until we hit that 2012 where mortgage rule were implemented. Now on here, we can see that the rule actually didn't change that detached home too much. It largely impacted the townhouses and condo. Now this makes sense because of all those new mortgage rules that were implemented. I would say it largely affects new buyer much more. So that's why we see, smaller houses like townhouse and apartment being hit more, whereas detached home doesn't get hit because they're bought by, wealthier people anyway. So those new restrictions didn't really affect them too much. All right, so with that in mind, let's then look at 2024 and see what's going on in the market. Now here, I'm going to be looking at 2021 all the way to today. All right, so 2021 coming out of COVID, we saw elevated unemployment rate, but we saw immediate recovery at 2022. Compared to the last two examples, it's quite a bit lower than what it historically has been. On the other hand, population growth stayed at around a 1 to 1.5%, so also very similar to the 08 example. Now moving on, looking at sales, here I'm only going to be looking at June to August during the summertime. The reason is because 2024 is not completed yet. I don't have the annual data, so I'm just going to take usually the 3 hottest months and then compare that to all the previous 3 years to see how they stack up. So for 2022, we actually saw a big drop in housing market activity compared to last year. The reason why, again, it's very similar to the last two examples we've seen. Because we just came out of a COVID, the FOMO, the big FOMO, where everyone were piling to buy during the 2020 and 2021. They were extremely hot markets. Naturally, we are going to be followed by a very slow market. So 22 was quite slow. 23 recovers somewhat back to a normal level, I would say. And then comes 2024, where we saw another huge drop in activity. The reason I would say here is because the full effect of interest rate hike were being felt by 2024. Usually there's 1.5 to 2 years of lag whenever there's a rate hike. That's what experts quote. So that would make sense because we saw a big rate hike during 2022. it took about 2 years before we start feeling those effects today. Now, what was interesting, however, is the price, according to the Greater Vancouver Board, the benchmark price did not fall during 2024. However, I don't think that is true because benchmark price is an estimation by the MLS. I'm instead going to look at median price to be more fair. We can see that in median price tells a completely different story. Median price has fallen quite a bit for detached, a little bit for townhouse, but surprisingly has increased for condo. Now, does that mean condo got more expensive during this year? I would say no. I think what it means is that there were more transactions going on from buyers focusing on larger units and more expensive units. And people were moving away from one bedroom. Now, I would say it seems like the buyers are now converging to a price point of around, I would say maybe 1 mil to maybe 1.2 mil. Because we can see this is why detached have fallen significantly. Townhouse, which is around that range, have stayed stagnant, and condo people are ditching the one bedroom and then now pushing towards the bigger units. So we're seemingly all converging to that price point. Now, on the other hand, active listing, of course, have increased significantly across the board this year. We're seeing a 50% increase for townhome and apartment and a 30% increase for detached. And we can see it's super elevated compared to the average. And because of this, days on market for 2024 has also increased quite a bit. Now, on average, we're hitting about a month plus before you can sell anything in Vancouver. All right, so with all those data in mind, let's take a look at historically what we have been seeing. What kind of pattern is there? First of all, inventory have increased substantially during rate hike. Mostly is a double-digit increase. Bad economy, especially a global event, has substantial effect on sales. However, both times immediately after during rate cut, we can see extraordinary hot market. Actually, if we look at 2021, we saw the same thing again, the big FOMO. I would say that time even crazier. But again, because of COVID skew the whole thing, we are not going to look at that too much. But if we included it, that would have been 3 points of patterns showing the same kind of behavior. Hot year, no matter why, always followed by a pretty slow market. Price jumps significantly during hot year, that's a given for sure. However, we also see an elevated and continual increase afterwards historically. Government implementation, mortgage rule set change does have substantial impact on sales activity and even pricing. So with that in mind, let's take a look at 2024, and I want to split this into 2 parts. First, let's take a look at upward pressure. What are some things going on right now that suggest or can help house prices to go up or sales activities to rebound? So first of all, I would say unemployment rate is actually relatively low compared to historical figures. Of course, this can change if economy continues to worsen. Then we might see a more elevated amount. Rate cut may get more aggressive because CPI just came out yesterday, 2% year over year. But we saw a negative 0.2% month over month drop, which can be worrying if this continues. We don't want a deflation, and because of this, the banks are now lowering what they expect the Bank of Canada's rate to be by summer. Many people before the CPI report were saying maybe like a 3 to 3.5%, but a lot of them now are quoting 3% or a 2.5% by summer 2025. Also, the 5-year Bank of Canada's yield have now dropped to 2.68%. So that means if this trend continues, we're going to see a much lower fixed rate, maybe around 3 to 3.5% by summer of next year. This has a big effect on not just your affordability, but also how much you can borrow. Also, we had 3 very slow years in terms of sales in Vancouver, so this might suggest more pent-up buyers waiting on the sideline, waiting to jump in. In 2025 summer may be the first opportunity we see this. Also, there is a $60K increase of RSP withdrawal per person, plus the FHSA of $8,000 per year. New buyers, a couple, both maxing both accounts, by 2025 should have at least $170,000 available as down payment. Now, this is not counting growth. So with some growth over the last 3 years, we might be actually seeing about a $200K down payment. It won't be a surprise. And also finally, this is the new mortgage rule that we just talked about. It was revealed last week and will be implemented by the end of the year. CMHC Insurance is going to raise the cap from 1 mil home to 1.5 mil. And now they allow a 30-year amortization as opposed to just 25 years. So not only can you borrow more with less down payment now, up to 1.5 mil, you also can pay much less on your monthly payment by stretching it to 5 extra years. Suddenly with this, for new home buyers, a lot of 3-bedroom or townhouses just open up and available for them to buy without having to come up with 20% down pay. So I would say all those can have pretty massive upward pressure. Now, on the other hand, let's take a look at what's the downward pressure right now. Now, number one is population growth can be lower going forward, especially depending on which political party wins. Conservatives have stated very clearly that they want to put a cap on population growth, so that might affect Vancouver's growth as well. Now, moreover, there's also the immigration side. And here we want to focus on the financial capabilities, because last time when we look at those two examples, historically, people that were immigrating had a lot of cash and they weren't really affected by mortgage restrictions or global events. So that's why housing market in Vancouver were being propped up regardless. Nowadays, 2024, it might be different, right? There's a lot more temporary worker, people that are working lower wage jobs coming in. They might not have that financial capability. So even though there are still good immigration numbers coming in, it might be more of a renter. And also we have a foreign buyer ban still in effect. Could affect somewhat, but I think at this moment, not such a big deal. Number one, there are ways to get around this. And number two, places like China, economy is not doing well anyway. So I don't think even if you allow them to buy, I don't think there's that many foreign buyers ready to buy anyway. Inventory is still pretty high, actually at a pretty elevated level compared to historical figure. Some of these might get taken off the market if they're investors and now they get to enjoy a much lower interest rate. And if the rent remains strong, they might actually take their units off the market. But I would say overall, the inventory is still quite high. It might still take some time for people to digest and go through all the inventory before we turn into a hot market. So because of this, we might still see a suppressed housing market in 2025. Global economy overall is not doing too well, especially the eastern countries. So that might be another concern. People able to send money over for their families to buy. Now, lastly, I would say buyer sentiment it might be another issue here because there's a lot of recency bias. So people are coming off of a very high interest rate, very slow market. There's a lot of price cut. Buyers might be keeping all those in mind and be a lot more cautious than before instead of just jumping in and grabbing something and have a FOMO. So if that's true, then even if rates were to cut and we see a rebound in sales, pricing may not go too crazy. We might not enter a FOMO market. Now, with all those points listed on both sides and historical patterns combined, mixing it all together, I would say from my side, my conclusion is that I would expect a substantial rebound in sales activities in Vancouver 2025 summer. And we are more likely to see a price increase, a substantial price rebound and increase than not. And the reason I'm saying this is because the upward pressure, the point I've listed, actually a lot of them have to do with real, money being affected. For example, mortgage rate being cut, right? That's immediately more affordable. You can borrow more. You pay less on monthly payments. The RSP increase and the FHSA for new home buyers, that's also directly impacting how much down payment they can come up with. CMHC changes to the mortgage insurance also increased to 1.5 mil. Again, that's directly more borrowing you can do with less down payment and stretching it to 30 years. That's again, less monthly payments. All those are tangible money related effects that we will immediately see going forward. Whereas the downward pressure, a lot of them are maybes, right? Like, don't get me wrong, they could be very relevant and they could be very powerful, but a lot of them are just guesswork. They're maybes. It could happen, it could not happen. And because of that, I'm going to lean more towards the upward side, again, because there's more tangibles going on. However, with that being said, I do believe if we were to see a substantial increase in sales activities and even price, the one bedrooms and the expensive detached, these two type of markets will continue to be suppressed and see a slow market, whereas everything else in between will see that kind of increase. And the reason is because, again, with all those upward pressure points, a lot of people are going to move away from one bedroom and lean towards a bigger unit. Because honestly, like, nobody wants to live in a one bedroom if they can help it, at least a 2-bedroom. So this is why I say all those implementation might actually hurt a one bedroom's demand and help everyone else. All right, so that's everything I want to share now. This is just my personal view. I might be completely wrong. I may have missed a whole side of story. So if you feel like you have a different view, you have some other data you want to supply that can add to this, narrative, then let me know in the comment down below. If you like these kind of videos, I do upload them every 2 weeks. I know I'm a little bit late because I had a sport injury, so I actually took 2 weeks off. But I do try to keep them every 2 weeks. Next week, I'm going to go over to the Chinese channel. I might actually do the same video, but do it in a Chinese version because I think this is pretty interesting. So if you want more content, you can also visit that channel. Alright, this is Jackie Cole. I hope you liked this video. I'll see you in 2 weeks. Bye!